Hello everybody, I hope y'all can hear me good. We're expecting a storm today, so the storm's coming in, but it's nothing like sitting out watching the water when the storm is getting ready to come. I don't know. I mean, it looks beautiful in the sunshine, but I really like to come out on the balcony and walk around the water and everything when a storm is coming. It seems it's not too hot, the breeze is nice, the water is a little bit more aggressive and you can hear the sound so much better. So I decided to come out on the balcony today and do our review of chapter 1 and chapter 2. It's going to be just a quick review. You remember I was telling you all that when we get through with chapter 1, chapter 2, we was going to do a review. And we was going to talk about it if anybody had any questions or anything that they wanted to kind of touch base on. And then when we finish week 3 and week 4, then we will also review week 3 and week 4. But right now, we're on chapter 1, inventory, and we did week 1 and week 2, and now we are reviewing week 1 and week 2. So I did look at some emails, and I just had a couple of questions. A lot of the questions was in our email, so I'll go ahead on and answer those right quick. Just a little Q&A, questions and answers right quick. It shouldn't take that long. But one of them was, could you explain the chart and how we use them for as invoice and our accounts receivables and our inventory sheet. So we're going to start off with the inventory sheet, okay? Well, let's do invoice first. And so our invoice sheet, you remember it looks like this. This is our invoice sheet, right? And that's when we order from the truck. That's when we order our items from the truck. And on the invoice sheet, it'll tell you what items you ordered, what's the item number. You remember when we was talking about the item number is something that identifies that item. And then it says item description. It'll tell if it's a gallon or if it's a pint or if it's just an each, or it'll tell you what color the item is, stuff like that. And then it has each, meaning how many you ordered. Then it'll have the price. That's your wholesale price. That's what you pay for it, not what you sell it for inside your store. It's what you buy it for, what you are paying the price for, okay? That's wholesale. And then it has the total price of what you spent for that item. That's on the invoice. And you have to kind of pay attention to your invoices, because sometimes your vendor will go up on prices one week and then the next week the price is low. But we're talking about the same item. Usually they will have the price will go up this week, then the price will go down next week, then the price might keep going up each week. The price might keep going up. You have to kind of look at those type of things, because if the price is constantly going up on those items, then that's when you probably want to try to find another vendor who might sell that item a little bit cheaper, especially if you think that that item shouldn't be that high. You want to shop around to other vendors who might sell that same exact thing and see, can you get that a little bit cheaper? Because remember, we're trying to save money here to put more profit in our pocket, okay? So when the vendor starts going up and up and up each week, every time time you order that same item and it keeps going up in price, then you might want to try to shop around and see can you find that item from another wholesale supplier cheaper. And because there's nothing wrong with doing that. You know, that's just look at it as bidding. You're bidding on something, and that's what you're supposed to do. And then sometimes your vendor will notice that you're not buying that item anymore, and they'll give you a call and be like, hey, you haven't been ordering, say, strawberries here lately. And you say, well, your strawberries are a little bit too high for me, so we are buying our strawberries from someone else. And then maybe they'll try to match the price. Oh, well, you know, we have a sale on it. Okay, well, you have a sale on it, and if it's cheaper than where you getting it from this week, then you can go ahead on and order that cheaper one. But you always want to keep your eyes out on when they are going up in prices. So just make sure you always do that. So that's far as invoice. So that's how you do invoice. And you know, we talked about how to put invoices on your accounts receivable, and your accounts receivable sheet is this sheet right here. That's your accounts receivable. That's like the pet item, dog food or whatever. And I'm just giving you a rough draft on how it is. But you put your invoice on your accounts receivables, and remember you put that on that account receivable so you have track and your inventory have track of what you have in your store. And like we said, sometimes you don't always put these on the sheets. We are doing it manually because the best way to learn is manually. Do it on paper first so you will have it and you know what you're doing, and then you can use your computer system on your job or wherever your work field is. You can always put it in the computer. That's how they would rather you do it when you're in the office or you're in the company. They input everything in the computer. Well, it's no different than putting it on the paper. It's just that you know how to calculate on paper and on a computer. You put everything in the computer the same way we have been putting it on in paper. Okay? So that's what your accounts receivable is. Every time an invoice comes in, you put it in accounts receivable. And you will have an accounts receivable inside your computer at work or wherever y'all do the inventory. They have that inside their computer, so you don't have to worry about that. You will just go to your accounts receivable part inside of your computer at work, and then it will have items, all the items that you sell in your store, and then you will fill out what items came in off a truck or a delivery. Any items that came in for that week, you have to put it on accounts receivable sheet or inside that computer, so that then the store and the computer knows what's inside that store. So when you count inventory, then everything will balance out, and when you sell things, the computer will steadily be calculating that as well. So that's the purpose of putting your invoice onto accounts receivable sheet. And then you put your invoice inside of a file that says invoice, and in this case we September 2020, and then you will put it in that file, because at the end of the month you have to pay those suppliers for everything they have delivered for you. Usually your wholesale vendor will give you a month to pay for the items they sent you. Okay, so usually at the end of the month, every company, every business, every store, whatever, they pay the vendors what they owe them. And how they know that what they owe them? By going back into the invoices, looking, and then they write the check. Okay, they add it up for the whole month, and then they send that wholesale supplier, that vendor, a check for that month of what they received. Okay, so that's how that goes. And sometimes you don't have to pay for it. Maybe you have someone in You can send it to corporate, you know, you send from the computer everything that the vendor has sent you. You know, sometimes you have to put all the invoices in a FedEx envelope, and then you ship it to corporate or ship it to the accounting people that runs that company, and then when they get it, then the accounting people at the corporate office will pay for the vendor's supplies, you know. And so that's what I'm saying about inventory. You even know how to say, if you just want to apply to be an accountant at a corporate office or a business or whatever, that's what you do. You collect all the bills, and then you pay for the bills once a month for that company. Okay? So that's how that goes. So not only do you know how to do inventory, you can also be an accountant up in the corporate office just paying bills, because you know about accounts receivable. When you pay your vendors, that's called accounts payable. That accounts receivable is when you have receiving the invoice, but you haven't paid for it yet. When you pay your vendors, that's called accounts payable. And after you cut the check, and you make a copy of the check, and you staple it on the invoice, and you put it in another envelope that says accounts payable. That's only after you have paid that vendor. After you have sent off the check to that vendor, then you can make a copy of the check that you paid them, staple it on there, and then you put it in the accounts payable file. That means that that supplier has been paid for everything that they have delivered us for that month, and we're done with them for that month. Okay, so that's what that is. So I had some questions on that. That was a couple of questions that I had. I just explained how the prices are for wholesale. Now let's talk about retail. Say like the milk is say $4. You pay like, let's say you pay $2 for milk, and from your wholesale supplier, your vendor. If you pay that $2 for milk, then when you sell it to your customers, you kind of want to make that price double what you paid for, or a little bit higher if the item looks like it can sell for that high price, you know. But usually if you pay $2 for milk from your vendor, you want to sell it for about $4.50. Milk, $4.50. You pay $2 for a gallon of milk, you want to sell it for about $4 or $4.50. It just depends. But you want to make double the price off of it, okay? So that's how you decide, and companies decide what their retail price is going to be. That's called retail price. Wholesale is what we pay for. Retail price is what our customers are going to pay for. Okay, what we set our price for the customers to pay. Okay. Another thing is when you get your delivery, when the truck delivers you all your items, you really want to make sure you're checking all those items. You're checking for damages. You're checking for any deliveries that's missing. Say if you ordered 5 milk and you only received 4, then you would have to deduct that from your invoice, because you didn't get 5, you only got 4, and you adjust the price for 4 milks, not 5, and you let your truck driver, he or she, initial it, you sign it, they sign it, just so that it's recorded that we didn't get that milk. And if the milk is damaged, say one is leaking real bad, you can't sell damaged goods, so you have to send that back with that truck driver. And then you also deduct the price of how many you sent back or what was damaged, you know. And you can even write on the invoice, damaged, leaking, and cross it out. and put -1 because you didn't get that one. And then you will adjust your price. Always be sure to adjust your price, because you don't want to have 4 milks and then adjust your price and you still paying for 5 milks. Okay, so that's how that goes. That's that missing thing. Explain the importance of wasted products or items and how it should be recorded. Okay, say you running your store all week, and say somebody was cleaning the shelf, the milk shelf, and they dropped a gallon of milk and the milk bust all over the floor. You can't sell that milk, right? So you should always have kind of like they call a waste sheet, and we will get into that further. You should always have like a waste sheet, so that anytime anything is wasted, or somebody make a mistake and break a bottle of something or anything, you know, your customers come in there and break things, your employees break things, you know, people do break things and or spill things and it can't be used anymore. Then you will go to your waste sheet, which it should be a waste sheet in every store, and you would write that item down as it was wasted. That way when you do inventory and one of your counts are off, it might be you're missing a milk, or you're missing a cabbage, or you're missing a pack of ground beef, or whatever. If the inventory say you're missing something, you can always go to the waste sheet and see if that item was on the waste sheet. Did you spill it? Did you waste it? Did you break it? Or what? And if it's on that waste sheet, then you say, oh, okay, that's why one is missing, because we wasted it this day or whatever, and you account for that item. Okay, so basically those are all the questions that I had for week 1, level 1, and week 2, level 2. Those were basically all the questions that you all had for me. And everybody was talking about the inventory sheet. Let's look at that right quick. Your inventory sheet. This is the inventory count sheet. Okay, you know how we go around the store and we count everything. And we count everything in the store, and we have our on-hand count and what we ordered and things like that. And a lot of people was asking about that on-hand. Always remember, when you count your store, whatever you have left, your ending count, whatever you had left in that store for this week. Say we had only 5 milk left this week after we counted inventory. The 5 milk is going to be our on-hand beginning count for the next week. And then when we order things, that's order received. So then you add your on-hand and your order received, okay? Let me repeat that one more time for y'all. When you count inventory at the end of the week, and say you only have 5 milk left in your store, your ending count will be your beginning count for that following week. You ended with 5 milks after inventory, and when inventory is over, we start a new week, you starting with 5. Now when you order more, then you put that on order received, and how many you receive, you would add that with the 5 that you have on hand, okay? That's how that goes. Your ending count will always be your beginning count for that next week, okay? So that's how that goes. So that's about all the questions that I had from people. They wanted to know about that on-hand count and the ending count. Just always remember, your ending count is always your beginning count for that following week. And then whatever you receive from the truck after that, you add it to your beginning count. It's really called beginning count, but in the business world, that's your on hand. Okay, so your ending count for the week, when you begin the week, this your beginning count as well. Okay, so you end it with 5 milks in week 1, and in the beginning of week 2, that's your on hand, 5 milks. And then when you order from a truck or anything like that, then you would add that count, whatever you ordered, you would add that to your on hand, and that's when you get your total on hand in that store for that week. So that's all the questions and reviews that I have for week 1 and week 2. And like I said, next week we will be on week 3, level 3. And then the next week we will be on week 4, level 4. And then after that, we will go into a review for week 3 and week 4. We will do the same thing. So if you have any questions after we do week 3 and week 4, just put them in the comment box or put them in the email. And the email address is cafeofknowledge88@gmail.com. And if you have any questions pertaining week 3 and week 4 coming up, just put them in the email, or you can put them in the below on the comment section. Okay, make sure you all like and please subscribe. Okay, because like I said, we're doing this, I'm doing this to help people, and we want to just spread help and knowledge throughout everyone. It's not costing anything. All you have to do is tune in and just hit subscribe, hit like, and appreciate it so much, and share with someone you think might need this and can help them further and increase their money and better their career. Okay, so always, that's what we're about on this channel, is helping people. Make sure you share and help someone else. Okay, bye bye, and I'll talk to y'all next week for week 3.